It started as a surprise profit warning from Disney. The Dow component's CEO told investors that earnings would be about the same as last year, not something Wall Street wanted to hear. They were expecting quite the opposite, solid growth in profits. Now, after that one disappointment came another, this one from Comcast, which said competition is stiff and warned that subscriptions would be down. It is no secret, of course, that media companies have been struggling as cherry-picking viewers stream more of their entertainment and step back from those traditional beefy bundles of cable TV channels. Today, those concerns played out in the stock market and how. Disney, which you likely own in a mutual fund, retirement account, or individually, was the worst performing Dow stock today. Comcast, meantime, the parent company of CNBC, which produces this program, was off more than 6%. And the selling spread to other parts of the media sector. Julia Boorstin takes a look at an industry under pressure.
Red flags raised about the current quarter from Disney and Comcast, making headlines out of Bank of America Merrill Lynch's media conference today.
I think what investors are worried about, though, is the pressure broadly on this group. So again, in an environment where people are shooting first and asking questions later, a little bit of weakness, a little bit of crack in the foundation gets people, really scared and rushing for the exits quickly.
Disney shares falling after CEO Bob Iger warning that earnings in the fiscal year ending in September would be in line with last year, short of analyst expectations. Iger attributed the shortfall to a number of reasons: growth in costs for NBA rights for ESPN, some costs related to buying more of BAMTech, as well as some impact from Hurricane Irma, cancellations at the park, the cancellations of 3 cruises, and shortenings of some other cruises. Then Comcast shares plummeted on concerns about the health of its cable business, on warnings about the third quarter from Comcast executive Matthew Strauss, saying that due to competition as well as Hurricane Harvey, the company expects to lose between 100,000 and 150,000 video subscribers in the third quarter. Though he said the company expects to hit its financial numbers this quarter, they called it the most competitive in recent history, with traditional rivals slashing prices as well as new digital entrants, Hulu and YouTube streaming TV bundles.
Investors are wrestling with the question of the viability of the traditional pay TV model. And I think there's no doubt that generationally, people are going to be subscribing more and more to these new over-the-top services. And I think that that's likely to put some pressure on, continuing pressure, probably accelerating pressure on the traditional pay TV bundle.
CBS and Viacom dropped not on any major news of their own, but those big questions raised by Disney and Comcast about how traditional media giants will transition into the digital media landscape and what kind of impact new digital streaming bundles will have. For Nightly Business Report, I'm Julia Boorstin in Los Angeles.